4.10 starts with some account balances. So we're given 4 assets: cash at bank, debtors, stock and vehicle. Assets have debit balances, so we'll put those in, and the date's the 1st of August, and we write the word balance. Got 3 liability accounts: creditors, loan and GST. Liabilities have credit balances, so they go in on the 1st of August. Capital we were given, unlike in 4.9 where we had to figure it out, we're actually given the capital figure, and we know owners' equity accounts have credit balances. We've now got all the transactions to enter into the ledgers, so we'll start with a cash sale of $3,200 plus GST, cost of sale $1,500. So we know that increases our cash asset by the sale amount and the GST, which is $3,520. But it increases our liability because that money's not ours, so our liability goes up on the credit side for $320, and so does the sale, and that's a revenue, so revenues are also credits. Need to account for the cost of sale because we can't have a sale without a cost of sale, and cost of sale is an expense, so in this case that'll be a debit of $1,500. Stock is an asset, that's what's going to go down. We've had to sacrifice some stock, so that matches up our debit with our credit. We then have buying goods on credit. This will be stock on credit from Oz Electricals, $5,400 plus GST. We've got more stock, which is an asset. We're being charged GST, so that reduces our liability. We haven't paid for this, so no effect on cash. What will happen instead is our creditors' liability will increase. That'll increase for the full amount, both the amount of the stock and the GST that we were charged. We paid for petrol, $165, so debit to the expense. That'll increase petrol. Debit to GST clearing, we've been charged GST, and a credit to cash at bank because we've spent $165. Paid the advertising account with the local newspaper, that's an advertising expense, and that'll be a debit. Charge GST, that reduces our liability. And on the credit side, we've lost $154 to pay advertising and GST. Received cash from clients, so another cash sale, $2,860 including GST of $260. Cost of sales $1,400. So cash has gone up $2,860, that's a debit. We've received GST, that's not our money, so that increases our obligation to give it to the government, so that's a liability going up, which is a credit. And our sales revenue has gone up on the credit side for $2,600. Take care of the cost of sale, debit the expense, and credit the stock asset. The proprietor would due $300 from the business, so this is drawings. Drawings have their own rule, they're a negative owner's equity, and they go up on the debit side. The business has lost cash. Cash is an asset, and it's decreased, so that'll be a credit. Invoice J Walker for a credit sale, $385 including GST of $35 with a cost price of $170. So unlike the previous sales where cash went up as a debit, this time it'll be debtors. We haven't actually received the money. The other side will be the same. We've charged a customer, so that'll increase our GST liability, and we've made a sale of $350. Cost of sale expense goes up $170, and our stock asset decreases $170. Paid the insurance on the car, it's for 1 year's insurance, so this is an account we're actually not going to do on the next SAC, so don't get too bothered with why is this an asset, but we're going to call it an asset called prepaid insurance. Assets go up on the debit side for $480. We will charge GST, and that for when we get charged GST, that reduces our liability, and our asset will decrease cash because we've paid $528. J Beam paid $300 on account. We learned earlier that this was someone that we made a credit sale to. So we're going to increase our cash at bank asset, but decrease another asset called debtors, remembering that there's no GST on the receipt of money from a debtor. The GST was already recorded when we made the sale in the past. We've paid for petrol, $110 including GST. So petrol is a $100 debit. GST is a debit of $10. And we're going to decrease our cash asset by $110. Bought stationery for $70, another expense, so another debit. We're going to decrease our GST liability again, so that's a debit, and then we'll decrease our cash at bank asset by $77. Paid Oz Electricals, this was a creditor of ours, so we're going to owe this creditor less money, so that'll decrease our creditors, so liabilities decrease on the debit side, And to do that, we had to decrease our cash at bank asset. So our asset goes down on the credit side. Arrange with the bank an overdraft limit of $10,000. This just means if we want to, we can extend our bank account $10,000 beyond its limit. There's no actual transaction with this, we can ignore it. Receive cash from customers. This is a cash sale of $2,800 plus GST. Price of the sale was $1,500. So cash goes up $3,080. We're receiving GST, that increases our liability, and we've got a sale revenue going up on the credit side. Factor in the cost of sale expense, which is a debit, and decrease the stock asset on the credit side. Wrote a check for petrol 121 including $11 GST, so that's a $110 expense if we take the GST out of the 121. Paying $11 GST will reduce our liability, and that'll decrease our bank account on the credit side by $121. Stock bought on cash, $1,800 plus GST. We've got more of an asset, so that's increasing, which is a debit. We're reducing our liability because we've been charged GST, and that'll decrease our cash by $1,980. We've cash clients paid a total of $980 including GST of $180. This is a cash sale with a cost of sale of $950. So we've received $980, which will increase our bank. The GST will increase our liability to the government, so that goes up on the credit side. We've got a sale on the credit side, and cost of sale is a debit of $950 as it's an expense, and the stock asset decreases $950. August 24th, made a loan repayment to Nissan Finance $250. That reduces our loan liability. Loans go down because their liabilities, they decrease on the debit side. And we've had to do this by paying cash, so that'll decrease our cash asset on the credit side. August 25th, more petrol, $99 including GST. So I'm going to need to divide that by 11 to get the GST out of it, and that'll give me petrol of $90. GST paid of $9, and total cash paid of $99. Jay Walker paid $100. This is one of our debtors, so we've got more money in the bank, so bank's going to increase, but debtors will decrease by $100, and just again reminding you that there's no GST on receipts from debtors. M. Harvey withdrew cash for personal use, so the owner's taken out drawings, which are a negative owner's equity, and they go up on the debit side, and that decreases the firm's bank account. We submitted a quote to supply 2 fridges for $1,200 each to a business, and a cost price of $700 each. Don't need to enter this. There's only a quote between the two parties. There's no legal transaction or contract here, so that doesn't meet the definition of a transaction, so we can ignore it.